So now the whole economy should have crashed. Oh, no, it didn't crash. Housing prices boomed. Oh, you pumped in trillions of dollars of fake money all around the world to artificially prop up the economies. That should have crashed. So now you saw the inflation numbers. They raised interest rates finally after saying the inflation was only temporary and transitory.
Right.
So now they're lowering interest rates because their economies are going way down. Canada lowered their interest rates 50 basis points, and one after another are lowering their interest rates. So you're seeing gold prices go back way up again. It's very simple. The lower interest rates go, the higher inflation's going to go.
Exactly.
And the higher gold prices are going to go. Let's go back to 2018 when he was president. The worst equity markets since 1931. What did he do? He forced Powell to lower interest rates, which Powell did in January 2019. Artificially propped up the equity markets. Oh, what happened in September? Oh, we'll forget about that. It was called the repo crisis because of all the fake money going in there and how they jacked the thing up and all the banksters needed more money. And then what happened? Oh, take a look at the economy in 2019. It wasn't doing great.
No,
and then the
wasn't.
COVID war begins in January 2020. So regardless of why it should bust, they're going to do everything they can this year to keep the boom going. Gold is it. You know, gold's been golden since written history, and it's not going away. It's only going to go up. And so, you know, we're very bullish on it. And again, one of our top trends this year.
Right.
2024, golden year for gold. Gold's up almost $700 an ounce since we made that forecast.
And it's going much higher.
Right there. We said it would be a golden year for gold. And it's going to continue. It's going to continue. There's no question about it.
So
because they're not going to raise interest rates.
Right.
They're not going to raise interest rates. End of story.
Right.
We said gold was going to keep going up as the dollar went down as they lower interest rates. So they're going to keep lowering interest rates, and that's going to keep pushing gold prices up high. Minus a wild card, we see the equity markets going up this year. We see gold prices going up this year. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold prices go up. They're all going down. They need, again, people forget tracking trends is an understanding of where we are and how we got here to see where we're going. What happened with the COVID war, the damage it has caused is incalculable.
Yes.
Let's go back to January 2020. It's launched in China on their Chinese Lunar New Year, the year of the rat. One country after another, take the United States, zero interest rate policy to artificially jack up the economy that was totally locked down. Oh, except for the, let's see, who's allowed to stay open? Oh, the big chains are allowed to stay open because they own the country. Where you buy booze, right? Yeah, you could. Oh, they're allowed. The liquor stores are allowed to stay open. You know why the liquor stores are allowed to stay open? Because of the high tax rates you got to pay when you buy booze.
Gold has been the ultimate safe haven asset for millennia, a constant in a world of change and chaos. As Gerald Celente points out, 2024 has already proven to be a golden year for gold, with prices surging by nearly $700 an ounce since the forecast was made. The trend, driven by a mix of economic policies, geopolitical turbulence, and declining trust in fiat currencies, shows no sign of slowing down. The relationship is simple. As interest rates fall, inflation rises, and gold prices climb. Governments and central banks, faced with economic stagnation, are trapped in a cycle of cutting interest rates to stimulate growth. But every rate cut chips away at the value of fiat currencies like the US dollar. When currencies lose value, gold shines brighter. Central banks around the world are slashing interest rates to counter the fallout from the COVID-era economic damage. Canada recently lowered rates by 50 basis points, and other nations are following suit. With each rate cut, inflationary pressures mount. And here's the kicker. Gold thrives in inflationary environments. The U.S. Federal Reserve's actions serve as a prime example. When the markets faced turmoil in 2018, then-President Trump pressured Jerome Powell to lower rates. Powell obliged, initiating a trend of artificially propping up the economy. But those quick fixes have long-term consequences. Fast forward to today, and inflation is no longer transitory, as they once claimed. It's a persistent threat. Celente doesn't hold back in addressing the stark divide between the wealthy elite and the rest of society. Policies aimed at economic recovery, like tax cuts for corporations and stock buybacks, have disproportionately benefited the 1%. According to the Tax Policy Center, 64% of the benefits from the 2017 tax cuts went to the wealthiest Americans. While the rich get richer, the middle class struggles to keep up. The cost of living continues to rise, wages stagnate, and economic mobility feels like a pipe dream. Celente aptly describes this system as Slavlandia, where the average worker toils away for diminishing returns. One of the key drivers behind gold's meteoric rise is the sheer amount of fake money pumped into the global economy. During the pandemic, governments injected trillions of dollars into markets to prevent an economic collapse. Housing markets boomed, stock markets soared, and yet the foundations of the economy remain shaky. But here's the problem. Artificial growth is unsustainable. What goes up on fake money inevitably comes crashing down. This is where gold comes in as the ultimate hedge. Unlike fiat currencies, gold cannot be printed or devalued by central banks. One might wonder, what could disrupt gold's trajectory? Celente acknowledges the possibility of a wild card, such as geopolitical conflicts or unforeseen technological advancements. However, he remains steadfast in his belief that gold's upward momentum is firmly grounded in economic fundamentals. Interestingly, Celente predicts that both equity markets and gold will perform well this year. While this might seem counterintuitive, it speaks to the broader trend of inflation pushing up asset prices across the board. Investors, wary of the dollar's decline, are diversifying into tangible assets like gold while still riding the equity market's wave. At the heart of the matter is the US dollar. Once the bedrock of global finance, the dollar is now losing its luster. As countries seek alternatives to the dollar for trade and reserves, gold emerges as the logical choice. A weaker dollar not only fuels inflation, but also accelerates gold's rise. To understand where we're headed, Celente urges us to examine how we got here. The COVID-19 pandemic was a catalyst, exposing the fragility of modern economies. The zero interest rate policy implemented during the crisis masked deeper issues, creating a bubble that was bound to burst. While gold investors reap the benefits of rising prices, the middle class continues to bear the brunt of flawed economic policies. From skyrocketing housing costs to stagnant wages, the average person feels left behind. As Celente puts it, the bigs are getting bigger, and the rest of us are getting poor. Gold has weathered countless storms throughout history. From ancient civilizations to modern economies, it has always retained its value. Why? Because gold is not just a commodity, it's a store of wealth, a hedge against uncertainty, and a symbol of stability. With central banks worldwide stockpiling gold and inflation eroding the value of fiat currencies, the case for gold has never been stronger. As Celente predicts, the golden year for gold is just the beginning.
So the politicians who never work a day in their life could get their dough.
Yep.
So now the whole economy should have crashed. Oh, no, it didn't crash. Housing prices boomed. Oh, you pumped in trillions of dollars of fake money all around the world to artificially prop up the economies. That should have crashed. So now you saw the inflation numbers. They raised interest rates finally after saying the inflation was only temporary and transitory.
Right.
So now they're lowering interest rates because their economies are going way down. Canada lowered their interest rates 50 basis points, and one after another are lowering their interest rates. You're seeing gold prices go back way up again. It's very simple. The lower interest rates go, the higher inflation's going to go,
Exactly.
and the higher gold prices are going to go. And now you go back to the United States. Let's go back to 2018 when he was president. The worst equity markets since 1931. What did he do? He forced Powell to lower interest rates, which Powell did in January. 2019, artificially propped up the equity markets. Oh, what happened in September? Oh, we'll forget about that. It was called the repo crisis because of all the fake money going in there and how they jacked the thing up and all the banksters needed more money. And then what happened? Oh, take a look at the economy in 2019. It wasn't doing great.
No.
And then the COVID war begins in January 2020. So regardless of why it should bust, they're going to do everything they can this year to keep the boom going. The middle class is going to continue to suffer.
Yeah.
Go back, by their deeds you shall know them. Trump lowered taxes in 2017 for the major corporations. According to the Tax Policy Center, the 1% got 64% of the benefits of the tax cuts. Not my numbers, their numbers.
Yeah, shocking.
Number two, he said they were going to use this money for capital improvements, meaning they're going to create jobs by creating capital improvements.
Yep.
2018 comes along. It was the biggest year of stock buybacks in history.
Yep. And we're seeing a lot of that activity today, too.
Got it. And you're going to see a lot more merger and acquisition activity as well.
Exactly.
So the bigs are going to get bigger, and we, the plantation workers of Slavelandia, are going to get poorer.
The story of gold in 2024 is not just about price increases or market trends. It's about a seismic shift in how the world views and values this precious metal. Gerald Celente's insights remind us that gold is more than just an investment. It's a reflection of our economic realities, a hedge against inflation, and a safe haven in times of uncertainty. But why is gold gaining so much momentum? And where are we headed next? Let's explore the factors driving this transformative movement. Gold's recent surge isn't a coincidence. It's a direct response to global economic policies, geopolitical instability, and a shift in monetary systems. As Gerald Celente highlights, governments worldwide are trapped in a cycle of unsustainable monetary practices. The COVID-19 pandemic only accelerated this trend, exposing the fragility of economies built on debt and artificial liquidity. The injection of trillions of dollars into the global economy to combat the pandemic led to a sharp increase in inflation. While central banks initially dismissed this inflation as transitory, it has become a persistent problem. This miscalculation has undermined confidence in traditional currencies and created fertile ground for gold to thrive. One of the most critical factors influencing gold's price is the relationship between interest rates and inflation. As central banks like the Federal Reserve cut interest rates to stimulate economic growth, the value of fiat currencies declines. This decline makes gold more attractive as a store of value. Gerald Celente emphasizes this point, noting, the lower interest rates go, the higher gold prices go. This simple yet powerful dynamic explains why gold has surged in 2024 and why it is likely to continue its upward trajectory. As countries like Canada lower their rates and others follow suit, the stage is set for gold to reach new heights. While the wealthy continue to benefit from rising asset prices, the middle class faces an increasingly bleak reality. Housing prices remain unaffordable for many, wages are stagnant, and the cost of living continues to rise. This economic disparity has left millions searching for ways to preserve their wealth and protect themselves from inflation. Gold provides a solution. Unlike stocks or real estate, which can be subject to market volatility and economic downturns, gold offers a stable and tangible asset that retains its value over time. For individuals looking to safeguard their savings, gold represents a reliable option in an unpredictable world. The decline of the dollar and the rise of a new global order. The US dollar has long been the world's reserve currency, but its dominance is being challenged. Countries like China and Russia are actively working to reduce their reliance on the dollar, exploring alternative trade systems and reserve assets. This shift, known as de-dollarization, has profound implications for the global financial system. As trust in the dollar erodes, gold is emerging as the preferred alternative. Central banks around the world are increasing their gold reserves, recognizing its value as a hedge against currency risk. This trend is not limited to emerging markets. Even developed economies are turning to gold as a way to diversify their reserves. To understand gold's current trajectory, we must look to history. During the Great Depression, gold retained its value while stock markets collapsed. Similarly, during the 2008 financial crisis, gold prices surged as investors sought safety amid the chaos. These historical examples highlight gold's resilience and its ability to thrive in times of economic turmoil. As we face new challenges in 2024 and beyond, Gold's role as a safe haven remains as relevant as ever. Gold's rise is not just about economics. It's also a reflection of geopolitical realities. The world is becoming increasingly polarized, with tensions between major powers such as the United States, China, and Russia shaping global dynamics. These tensions are driving nations to seek greater financial independence, and gold is playing a central role in this strategy. For example, China has been quietly accumulating gold for years, using its reserves as a way to insulate itself from potential economic sanctions or currency fluctuations. Russia has followed a similar path, reducing its holdings of U.S. treasuries and increasing its gold reserves. This strategic shift underscores gold's importance as a tool of economic sovereignty. Central banks are at the forefront of gold's resurgence. In 2023, central banks purchased record amounts of gold, and this trend has continued into 2024. These purchases are not random. They are part of a deliberate strategy to reduce reliance on the US dollar and strengthen national currencies. Gerald Celente points out that this shift is not just about individual countries, it's about a broader move towards a new financial system. The idea of a gold-backed currency is gaining traction, with countries exploring ways to use gold as a foundation for international trade and monetary policy. Gold's appeal is not limited to traditional investors. As Celente notes, gold is finding new relevance in the modern economy. From its use in technology and renewable energy to its potential role in digital currencies, gold is evolving to meet the demands of a changing world. For instance, the rise of central bank digital currencies, CBDCs, presents an opportunity for gold to play a pivotal role. By pegging CBDCs to gold, countries can create a stable and transparent monetary system that combines the benefits of digital technology with the trust and stability of gold. Beyond its economic and geopolitical significance, gold holds a deeper appeal. It represents security, stability, and a connection to the past. For many, owning gold is not just about financial returns. It's about preserving a sense of control in an increasingly uncertain world. This emotional connection is particularly important in times of crisis. As Celente highlights, gold provides a sense of reassurance and a tangible asset that transcends borders and cultures. In a world where trust in institutions is waning, gold offers a timeless alternative. As we look to the future, several factors suggest that gold's upward momentum will continue. Economic instability. The global economy remains fragile, with high levels of debt and persistent inflation, creating ongoing uncertainty. Geopolitical risks. Tensions between major powers and regional conflicts will drive demand for safe haven assets like gold. Central bank policies. Continued rate cuts and monetary easing will weaken fiat currencies, making gold an attractive alternative. Technological advancements. Gold's role in emerging technologies and renewable energy will create new sources of demand. For investors, the message is clear. Gold is not just a relic of the past, it's a cornerstone of the future. Whether you're looking to protect your wealth, hedge against inflation, or navigate the complexities of the modern financial system, gold offers a proven solution. In the words of Gerald Celente, gold has been golden since written history. Its value is timeless, its appeal universal, and its role indispensable. As we face the challenges of the modern era, gold remains a beacon of stability and a symbol of resilience. The golden year of 2024 is not an anomaly. It's the beginning of a new chapter in gold's storied history. For those who recognize its potential, gold offers not just an investment, but a foundation for navigating an uncertain world. As we move forward, one thing is clear: gold's golden future has only just begun.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.